Hello everyone, welcome to the channel. Let's do a weekly narrative building as to how Nifty might react in the coming weeks. So, from weekly perspective, what we see as part of price action is, if I take from this leg of price action, market went up, came down, went up again, but could not sustain above this, immediately came down with a closure below this. Now, market tried to pull back to a particular supply, right? And market is trying to come down, right? This is a structure, so we can clearly see that the structure from a weekly perspective is bearish. It's clear, right? So next what we do is we mark the weekly ranges. How far can Nifty travel in this particular coming week or in the next upcoming weeks? So we clearly see that there is a small amount of imbalance or small amount of gap which is left by the market, which is not completely tested by the market, right? So ideally what we can see is there are two set of price actions which can happen. Either market can come down to this particular demand and give a positive reaction and starts to move up. This is one set of price action. Okay, second set of price action, what can happen is market, since it is already in a negative trend, which we discussed few moments back, it can break this particular demand which we have, pull back to a supply and continue moving down is second set of price action. Only these two are the possible set of movements which we can have in the upcoming week. Okay, so this is a clear cut downward range which we have to monitor whether market is breaking this demand or market is going to give a positive reaction and start to move up. So from another weekly range which we can see is there is a gap which is left out untested here as well. So this is going to be our ideal range in the upcoming weeks also, meaning market can travel in this range. So weekly ranges is defined, topmost range is 25,130 and bottommost range is 22,200. Nifty might travel only between these two range. Important point to notice, on Friday US government has released the job related data, meaning their expectation was somewhere close to 80,000 as a job vacancies, but 160,000 job were left open, meaning there is huge amount of positions which are yet to be filled. Many people have lost their jobs, many people are yet to find jobs. This in turn created a huge negativity in the market. If you see Nifty, Gift Nifty's 15 minutes chart, so what we can see in Gift Nifty's 15 minutes chart is market went down all the way till 23,000. Although it is showing 23,447 as closing, on Friday it closed somewhere close to 23,000. So we can expect a huge negative or a gap down opening as part of tomorrow. Meaning if market opens huge gap down or if market opens flat, only these two scenarios can happen. Okay, so immediate to immediately what we can see is, from we'll just go to a higher time frame and we'll discuss our all set of criterias from there, and then we will discuss about the lower time frame related to how we can take a trade. The high of this particular candle, whichever I am hovering around, the high of this candle is 23,244.85. The low of this candle is 23,247. Here it is 240. Yeah, 244 is a high, 247. So this is also currently being tested. So there are no possible demands which is left over in the market when it comes to Nifty's downward movement. If market opens as per Gift Nifty, okay, if it opens gap down tomorrow, okay, so ideally speaking, if market opens somewhere close to here, so do not hurry into a trade. See if you can get a positive reaction from this demand. If we get a positive reaction, we can target at least till today's, I mean Friday's session closing. This is going to be my A plus trade. Okay, if market opens gap down and gives a positive reaction, if market opens gap down and continuously pushes down, right, like this, if it keeps pushing down like this, I'm not much interested in the trade. Let market go. Let it go anywhere. Probably by day after tomorrow, meaning on Tuesday, we can plan a better trade. Because when we mark a demand, we ideally, our only goal is to see if we can get a positive reaction from the demand and take the market higher. Why? What is the meaning of demand? Meaning, if I go back to a weekly chart, and the reason why I mark this as a demand is, if you see clearly, whenever market came here to the lowest point earlier, this was a gap which was left by the market, right? This acted as a demand. When market came back to a demand, buying came in. Okay, this buying, what it left is, it lefted footprints to us saying like huge institution has stepped into the market in this particular place. So whenever market comes back to this place, what we can ideally see is, there might be lot of orders which are left out by the market by these huge participants, which can drive the market higher. This is what is the meaning of demand. Same applies to supply. What supply means is, whenever market came here, it left a huge amount of orders which are not yet filled. So ideally speaking, when market comes back to a supply, what we see is, we expect a negative reaction like this to take the market down. This is the whole concept or whole heart of SMC. Heart of SMC is only main to main structure. Second is coming as demand and supply. Third is liquidity. If you master these three concepts, you might become a very, very independent trader, and you don't need to follow any other channels also. Okay, so having said that, let's go to a 4 hours chart perspective. So from 4 hours chart perspective, we can narrow down this range to the small indecision candle. This is where the demand is sitting, because ideally the other um, demands are all retested by the market. Even this range was also filled by market on as part of Wednesday's trading range. Okay, so if market opens flat and if market breaks this range, then on small pullback I can target this as a downward range. I don't want to target close to close like 600 to 800 points in one day. I am happy with capturing 100 points and trailing after 100 points. I expect you also to do the same thing. Follow process. Process is more important. Okay, so ideally speaking, there is this demand which is sitting here. So this is going to be our prime focus. If market breaks this demand, then a clear downward range of 22,400 can be easily possible. So our primary focus is to focus whether we get a positive reaction from this first demand like this to take the market higher, at least till this open supply which we have. The open supply I am talking about is this particular red candle, which is yet to be completely retested by the market. Okay, there is a small amount of imbalance left out. This is going to be our first target. If this is being met, we can plan a call position on the coming days. For tomorrow, let's keep our trading range simple. If market opens flat and comes down, or market opens gap down and gives a positive reaction, we will take the market higher. If market does not give this positive reaction and breaks this particular demand, then we can expect a pullback to a supply and then take this market even further down. I hope this video is educative. Thank you so much for watching. We'll meet in the next education video.